Seminar. This year we're looking at the end of year for 24-25, for the tax year 24-25, and we'll be looking later on at how we start the new tax year 25-26. My name is Bruce Kidd. I'm the Sales and Marketing Director here at o-a-sys, and I'm sure most of you know by now who I am and what I do here. I speak to most of you every now and then. But if you don't know who I am and what I look like, that's just a quick reminder of myself. You won't have to look at that for long as we move on to the next screens. I've been at o-a-sys now. It will be 20 years this year. So I think I've kind of know everything there is to know about Opera, apart from the development side, but everything else I think I can help with at this point in time. So that was our introductions and our welcome. Again, welcome everybody. I know it's a long session. A lot of information is passed during the session. And if anybody has any questions, anything, we can do that during the Q&A section. When we get that, make a note or type me something in the meeting chat area, and I can pick that up when we do it at that point in time. No need to make any notes, as I will be recording the session. Thank you, Sunita, for asking. I will be recording the session, or I am recording the session. Currently, I'll edit it a little bit, and I'll make it available to those of you who have attended, and indeed to some of the people who have not attended. So I'm asking you to keep your microphones on mute while we go through, just so that there's no real distractions on the sound recording when it goes out to everybody later on. But keep those questions for the Q&A section, or type them in the meeting chat as we go along, and like I said, I will pick them up when we get to that point in time. So first thing we're going to be looking at is the legislative changes for the 25-26 tax year. I'm going to follow that up with some utilities for payroll, some third-party utilities. I want to stress these are not things that's included in the actual software as it stands, but these are additional utilities that can help you make and run your Opera even more smooth in 2025 and beyond. And of course comes at an additional cost. Just want to stress that it's not included in the software, like many people thought last year. Then cover the payroll end of year for 24-25 and how we start our 25-26 tax year as well. We'll go into a Q&A and then we'll finish after that point in time. So first thing that we're going to be looking at is our legislative changes. So there's a few to look at. We've got statutory neonatal care pay and leave, which is new this year. Well, we've got some FPS and EPS and NVR changes to look at. We have a small change in the prior year FPS changes, well, mostly due to NI codes that was introduced in the last tax year. We've got some indication of lifetime allowance and some changes that's happened in the software for that. We've got our customary substitute forms P60 we'll be looking at. We also have a new place of work postcode, which really affects Freeport and investment zone employees. And then we've got some other changes looking at auto enrollment and of course our normal statutory rates that we go through every year. So first we're looking at the neonatal care pay and leave support. So who is this applied to? It applies to all employees who work in England, Scotland and Wales. And when is it effective? From the 6th of April 2025. So the HMRC is set to introduce a new statutory allowance on behalf of the Department of Business and Trade commencing from April 2025. The statutory neonatal care pay and leave is designed to provide support for parents whose newborn require neonatal care within the first 28 days post-birth. So this neonatal care leave will be available to employees from their first day in a new job and will apply to parents of babies who are are admitted into hospital up to the age of 28 days, and who have a continuous stay in hospital of 7 days or more. SNCP, as it is called for short, offers qualifying parents up to 12 weeks of paid leave, which can be claimed flexibly based on individual circumstances. The allowance is structured to complement existing statutory entitlements, which includes maternity and paternity leave, so it extends the support available during this critical time for parents. The introduction of SNCP addresses the need for parents to allocate additional time for infants requiring prolonged hospital care, mitigating the pressure to return to work prematurely. So the administration of SNCP is anticipated to align with existing statutory payment processes, such as those established for SPB pay and leave, so statutory paternal bereavement pay and leave, for example. SNCP has been implemented in Opera 3 as a manual process with a new payment profile required. So the SNCP payments will then be included in the P32, the FPS, the EPS, and the payment information is easily accessible through various views available from within payroll processing, such as the to-date form and various payroll reports. The payment follows the same administration process as other statutory payments, such as SBPP. Payments will be paid out by employers and claimed back through payroll processes. Payments will be treated as earnings for tax and national insurance contribution purposes as per all statutory payments. So what are we looking at? The software changes that is brought in for the statutory neonatal care and pay and leave. So like we mentioned or said, there's a new type called SNCP that needs to be set up for payments relating to neonatal care, pay and leave. And the PAYE, NI and statutory payments form, so the tables that we hold the information in, now include fields to record the earnings related percentage rate and the standard rate for SNCP. These are updated automatically along with other statutory payment rates. What you will notice is that it's no different to something like the SBP or the shared parental leave, indeed on that side, with a 90% and a standard rate of 187.18 for the new year coming. The FPS and the EPS submissions are also included with details for the statutory neonatal care, pay and leave. So the FPS, EPS and NVR changes, again, this affects all employees that work in England, Scotland, Wales and Northern Ireland, effective from the 6th of April 2025. So the usual year-on-year uplift changes have been made along with following additions. So this in software changes in the FPS. So the employee workplace code, which we will cover later on, but this is now included into the FPS when we select it. And just a little screenshot there of what that area looks like in the details and bank in payroll processing, where we enter that place of work postcode. And like I said before, this is for employees who has an NI letter associated with the free port or the investment zone. The value of statutory neonatal care pay, SNCP, to date has been included. Pensions commencement excess lump sum indicator, which has got to do with this lifetime allowance that we'll look at later. This is now included on the FPS as well as the standalone lump sum indicator, which are two new checkboxes that appear in the additional information after you've done the year end for 24-25, moving into 25-26 tax year. On the EPS, the value of statutory neonatal care pay recovered year to date has been added, as well as value of national insurance compensation on statutory neonatal care pay year to date. No changes on the NVR. So some small changes on prior year FPS has been done. This applies to all employees in England, Scotland, Wales and Northern Ireland, effective from the 6th of April 2025. The summary, the prior year FPS full payment summary form has been updated to have the ability to add investment zones that were implemented as part of the 2025 payroll upgrade. So in the software changes, we can see that the new NI code has been added to be able to make changes to prior year FPS as it was introduced last year. This brings us to our lifetime allowance. Again, this affects our employees in England, Scotland and Wales. Notice Northern Ireland not included there, effective from the 6th of April 2025. So in addition to the 3 existing indicators for the pension drawdown type, 2 more have been introduced in relation to lifetime allowances. We call it P-cells, the pension commencement excess lump sum. It's the first tick box that you'll see now in the additional information. And the second one is standalone lump sum or cells, as we call it, which is the second tick box that's been added in the additional information on the F5 screen for the employees. Some notes on those checkboxes just to make you aware of. The pension commencement excess lump sum, so P cells and standalone lump sum cells are part of 5 checkboxes. So these 2 has been added, commonly referred to as the flexible drawdown pension types. From 25-26, it will only be possible to produce 1 flexible drawdown pension type per pay period. As a result, the 5 boxes are mutually exclusive. As with the 3 existing flexible drawdown pension fields, the P cells and cells must be used with a payment profile that has the flexible pension checkbox set on. So following running the end of year clear down, including 24-25 tax year end, the fields are reset to unticked and must be updated as necessary. So as with the 3 existing flexible drawdown pension types, the P cells and cells are recorded for HMRC in the FPS. So in our full payment submission, the information is recorded and sent to HMRC. So employer substitute P60 forms. Well, the form P60 is the annual tax form that we issue to taxpayers at the end of a relevant tax year. It contains exact information about the earnings, the pay-as-you-earn, and the national insurance contributions paid during the specified tax year. So major changes this year on the P20 on the P60 form is the tax year has been changed to 2025. There's no other changes on here. The layout is exactly the same, and of course the information that it contains is exactly the same as the year before. So just to mention really quickly, the Pegasus software will pre-print the P60 information, and of course you can print it to PDF as well to keep for your own records online somewhere. But the question sometimes comes up is HMRC do not produce pre-printed stationery anymore for the HMRC. However, we've linked up with this company, Custom Forms Direct, as we did in previous year. They supply pre-printed P60 stationery, self-seal ones with no file copy, of course, because you can do the file copy from Pegasus itself, but they will sell them in some increments of boxes. I've put the pricing on the screen so you can see what they are. And should you want to perhaps order any of these for use, you can either speak to myself on the information on the screen, or you can just pop over to the order form on our website where you can place an order, and I will be able to pick that up and get that sent out to you from these guys. Of course, not everybody wants pre-printed stationery on P60s. What Pegasus produces is good enough for all legal purposes. The next new introduction is our place of work postcode. Employees, it affects everybody working in the UK and effective from the 6th of April 2025. So what is it? It's for the 25-26 tax year, and we kind of assume at this point onwards, HMRC have introduced the requirement to record the postcode of the workplace in the FPS where the employee has an NI code relating to either a Freeport or investment zone scheme. So what's happened is a new field place of work postcode has been added to the details. Oh, sorry about the spelling mistake there. The details and bank form in payroll processing. And it's just the place of work postcode that's recorded and, of course, forwarded to HMRC. The field is only available where either Freeport or investment zones are in use, although only effective from the start of the 25-26 tax year. The field is available immediately upon upgrade to the right release of software, therefore allowing payroll staff the ability to update the employee fields in readiness for the new year. It is also possible to enter a postcode against an employee who is not assigned an NI letter associated with either Freeport or investment zone schemes. However, but the information is not passed to the FPS, as it's not relevant to the employee. But we can record the information should we wish to do so. So at the time of writing this seminar, the pensions regulator hasn't announced the auto-enrollment rates for the 6th of April 2025. However, in the meantime, they have, and what I'm presenting later on are the correct figures for the 2025-2026 tax year. And then the statutory rates, these have been confirmed, changes to tax bands, NI settings, statutory payments, and have been implemented in readiness for the 25-26 tax year. They include Scottish and Welsh tax bands, if that is what you need, but they are also subject to parliamentary approval. Changes to student or postgraduate loan thresholds have been confirmed and introduced, and a post-upgrade release additional update may be required should any of these information need to change at short notice. And just like that, we kind of get to our tax rates and bands and all the different things that's been set for these before we get to the actual utilities. So as a starting point, we've got our national insurance rates and earnings limits. Now, I know it's just a bunch of numbers on the screen, and I know most people don't actually ever look at these. However, I can tell you that the lower earnings limit here has ever so slightly increased. For example, the weekly has increased from 123 to 125, and and the rest of the levels there has increased ever so slightly as well. And I can also mention that the secondary threshold has been slashed from wherever it was. It's come down to 96, and it's quite a significant change. I think the annual at the bottom was 9 grand before, now it's 5,000. We have our employer and employees and employers NI contribution tables. Now, first one we are looking at is the employees table up to the letter I. What you'll notice is that there are no changes to this table specifically since last year. The second part of it, the letters J to Z, again, no changes on the percentages that's held in here. Then we're looking at an employer's contribution file, and of course, everybody will immediately notice the 1.2% increase across all areas, which was 13.8% last year. It's all gone up to 15%. And just to show you, this is all across the board. That's the first part, and that's the second part of these of this table, all has gone up to 15%. So income tax and bands rate for the rest of the UK, well, this is excluding Wales and Scotland, of course. There's been no changes to the 25-26 bands, as the basic rate, higher rate and additional rate stays exactly the same. The income tax rate and bands for Scotland and the Welsh rates, well, and the Welsh rate, you will notice, again, there's been no changes to any of the basic, higher or additional rates. You will notice on the Scottish rate, though, some changes to the standard rate, the starter rate, the basic rate, and the intermediate rate. The higher, advanced, and top rate stays the same as it was the year before. No changes to our tax allowances this year. Its personal allowance stands at 12,570 for the 25-26 tax year, and marriage allowance stays at 1,257 for the 25-26 tax year. Our emergency tax codes has also not changed this year and stays at 1257L for the 25-26 tax year, with codes L, M, and N not changing at all again for the 25 and 26 tax year. So the statutory maternity, paternity, adoption, shared parental and parental bereavement and now neonatal care pay structure, well, there's no difference to the structure, but what we have is that the weekly rate has increased to £187.18. None of the information has changed, so we have our first 6 week on maternity pay still at 90% of the employer's average weekly earnings. Same with adoption pay, we have 90% of employees' average weekly earnings. Then on SMP, SAP, SS, SHPP, SPBP, and the new neonatal care pay, that's all paid weekly. We still have 90% of average weekly earnings, or whichever is lower. So 187.18 is what the weekly rate is now. And here in the bottom, I just wanted to show you that if your class 1 and national insurance for both employee and employer contributions is above 45k for the previous tax year, then you are entitled to small employers relief, and that has increased this year and the new year to 108.5% from 103% on the national insurance class 1A for all those elements. And the statutory sick pay now comes to 118.75 per week, has increased to that. This table really just shows how many days a person works in a week to decide what the day rate for statutory sick pay is. So a person who works 7 days in a week, well, that's the 1 day, 2, 3, 4, 5, 6 days, and full 7 days would be 118.75, and just goes down here. I think most people would sit probably on the 5 days, where the 5th day gives you the full 118.75. And this will be applicable from the 6th of April 2025. Small employers relief, well, the recovery and compensation rates for small employers relief and the classification of a small business have not changed. Employers who qualify for small employers relief are those with a total annual class 1 NIC, including primary and secondary liability of £45,000 or less. Employers who qualified for small employers relief can recover 100% of statutory payments, which is all the ones that I've got there in the brackets, paid to their employees, plus now 8.5% compensation. If you do not qualify for small employers relief, you can recover 92% of the statutory payments paid to your employees. Student loans and postgraduate loan thresholds have ever so slightly changed. Plan 1 has gone up to 26,065 for the 25-26 tax year, still with a deduction rate of 9%. Plan 2, ever slight increase to 28,470, and plan 4, which is the Scottish loan, increased to 32,745, all with a deduction rate of 9%. And then our postgraduate loans, or Plan 3 as we call it, has not increased and stays on 21,000 for the 25-26 tax year, and that's deducted at a rate of 6%. Like I said earlier on, the thresholds for auto enrollment hasn't changed from the previous year, so this table is actually still valid for the year. The total minimum auto enrollment contribution remains unchanged at 8%, with the employer contributing at least 3% of that. We also have thresholds for termination and sporting testimonial payments. I've had this included on my seminar for the last 5 years, and there's never been any changes to them. And this year is almost no different, apart from the NI contribution rate that applicable now is 15% for the 25-26 tax year instead of the 13.8. But that's in line with the whole of the NI increase. An important thing to remember is that the employment allowance, which normally sits at 5,000 or has been sitting at 5,000, has actually increased to 10,500 from the 6th of April 2025. And apprenticeship levies stays the same and remains as £15,000, and the deduction remains the same at 0.5%. Want to mention the national living wage and the increases. The bands have not changed for this year, and it just shows you the increases. I put the old rate, or the 2025 rate, in brackets, and please note that this applies from the 1st of April 2025 for work that any of these people have done. So that takes care of all the legislative changes that's been set by HMRC, and some indication of how they would be managed within the software. In most instances, it's very much just a reporting issue that happens. So that's the legislative changes. And what I'm wanting to do next is look at the payroll utilities, or not all of them are payroll utilities, but the payroll utilities that o-a-sys have developed, as well as some third-party utilities that comes from different suppliers, effectively. I will demonstrate one or two of these, mainly the ones that o-a-sys have done, talk through the others, and show a 1-minute video in relation to one of the other areas that we are looking at. Please remember that anything you see in the next 5 or 10 minutes is not standard functionality in Opera 3. And if you are interested in any of this functionality, let me know, and I can let you know what the cost is and how we can implement this and how it works for you, how it could work for you. So some of the things I'll be looking at is employee and timesheet imports, personnel email addresses. You know, the idea that you can't reuse an email address in the Opera system. I've got a very small utility that sits in the publisher for print to file and Excel locations. So setting the location of where each individual user wants to print a file to. I'm going to talk about the monthly average holiday reporting, some auto enrollment utilities, a brief look at which ones are available, and then a very quick look at Duet, which is a third-party product, but also can manage timesheets, expenses, requisitions, service desk, and more recently, they've added functionality to interact with a calendar, for example, to the Duet family. So first thing I want to look at is the timesheet utility. So it's designed to import data from any time and attendance type system that has the capability to output its time data in either a CSV, a text, or an XLS format file. It can also be used to import data that's been created using Excel. So full integration into the Opera 3 all variants systems. We cover the weekly, monthly, 2-weekly, and 4-weekly groups within that. The user-definable multiple import format types. So it just means you can set as many formatted import up as you need to. And the import runs validation. There's some error reporting, and of course, it's fully maintained to the latest versions of Opera if you need to use them. So firstly, when it's been installed in personnel, we have a maintenance area and we have a new employees import, and there we can configure the file templates. And once it's open in the action button, you will find the assign code section to break down the fields and the import files. So just a kind of screenshot to show you the setup of one of these potential import files. This is a new employee import I've set up yesterday, and we'll be running in a second to show you how it works. But also in our personnel utilities, we now have the new employees import. And as you can see, you pick up your type, you select the group you want to include it in, and you pick up your import file. In my instance, that it was, say okay to that, and it imports my new employees for me. New employees are imported as personnel only employees, which means you have to go into payroll and set some parameters in there to make them full payroll employees. So like I said, it creates personnel only employees that need the employee profile allocated before it's a full employee for payroll. Second part of that utility is our timesheets import. So I've got my new employees in, and now I can go into payroll, maintenance, timesheet import to configure the import file templates. Once open in the action button, again, you will find the timesheet import profiles to set the fields in the import files. So now I've set the same idea as with new employees. I can set some different timesheet imports to import different information. In this case, it's a pure time and attendance or timesheet import that I've done in here for time element, basic, overtime, and some bonus. But to import, I can go into payroll, utilities, timesheets, imports. I can pick up the import type and import the information, say okay to that, and it imports the timesheets into the area that I needed it to. Validation will happen and the data will be imported, but if anything is wrong, you're able to reverse the import by going to payroll utilities, reverse timesheet import. So very easy, you can then just pick up the same import you've just done and reverse that import should you need to do so. I think let's quickly pop into my Opera and have a quick look at what I just showed you. So in my personnel utilities, I've got a new employees import. Like I said, I've set one up already for my monthly group. I keep my monthly group there. The file has been set as to where I'm going to import it from, and it's an employees import. Let's select that one there and say okay to that. It's asking me, am I sure I want to import? I am sure I want to import. And when it's done, it will tell me so. Okay, and now if I go into my payroll, into my monthly group, I will see the first 4 employees here I've just imported. They won't have profiles. I can allocate a profile to them, allocate an NI number, which I didn't import at this point in time. And of course, I can set any value I'm going to be paying them at this point on them, so that when I do a calculation, these employees are part of my calculation. But I can also, like I said to you, import my timesheets. So again, in my payroll utilities, import timesheets, I have the same idea. This time I created a weekly import to import into my weekly group. And how would it know it's a weekly import? Well, because the employee profile set, the employee reference numbers are set, and that's how it knows which ones to import this against. So in my instance, I've only created a file that includes weekly employees. So there were no issues. It's giving me some information. So it immediately picks up that I changed the rate on 2 of my basic paid employees. I set it to 35. But it will also give me a report to show me exactly what else it has imported into that file, broken down by my employee numbers, by the different profiles that I've imported, where I've imported it to, and what the value of that import was. And very important, at the bottom, it gives me some full totals of what I have done. So I could easily work backwards and see that I've done what I needed to do. So now that I've imported my timesheets in full, just very quickly show you in my F11 screen, that's a timesheet import I literally just did a second ago. Again, that is a timesheet import that I did on all these employees. These are timesheet imports I did a minute ago. So I'm now ready to run a calculation if I have done everything else I needed to do. In the same way, I could use the timesheet import if I reimburse my employees expenses, for example, through my payroll. I can set up an expenses import, and you can see there mine is set for the 2 weekly group. Expenses, what I'm going to pick up. Let's just pick up some expenses there. Say OK to that, and this will now go away. It will read the file in and give me some information on what it has imported. And in this instance, I only set my import up for expenses because that's all I wanted to do. And now you would see there was only 4 employees in that list, but I put my expenses for all of them in the relevant column. So when I do any form of calculation, the expenses will be reimbursed to them. And in the same way, I can reverse my timesheet imports in here by picking up which one I want to reverse and picking up the file from here that I want to reverse, as you can see there. I'm not going to do that right now. I want the figures to remain in my system. And that is the timesheet import configured and ready to go in the system. The second thing I want to talk about is the personnel email addresses. It's a very small utility that sits in the background. It reuses leaver email addresses. It allows me to reuse leaver email addresses in my system. It removes leaver email addresses in the payroll utilities. Remove leaver email addresses. You can see that. Allows me to remove in bulk all the levers in my system's email addresses when I run that one utility in there. This is the screen it gives me. So do I want to remove email addresses from all L, D, or H type levers? So it's just showing me which ones can be reused. The X is current period lever. And when I enter an email address in a new employee, I get a pop-up message now that says the email is already in use. Do you want to reuse it effectively, or do you want to reuse it from the lever? If you say yes, you can reuse it in the new place. If you say no, then it remains and you need to put a different email address in. Let's pop over. Let me just very briefly show you that. So I've got this remove email addresses. I can tick any of the links on, say OK to that, and it will go through, and any people who are marked any of that kind of levers will have the email address removed from the F5 screen. From there, if it has existed. In the same way, if I decide to put an email address in for a new starter or someone who's here, if I try and use an email address that already exists within the system, I get this pop-up message that says the email is already used by a leaver named that person. That's the reference number. His work and home emails are set as that. And do I want to remove it from that lever? If I say yes to that, it allows me to reuse it here, and I can save it within my system here. And it's now just part of that employee record, as you can see. A very small utility, but very useful, especially if you deal with a whole host of people within your system. Next thing I want to mention is what we call our print to PDF/Excel locations. This is perhaps not relevant to payroll only, but relevant to anybody that uses the publisher in Pegasus and Opera 3. So when the publisher pops up for printing, you will notice the first thing is a red writing on the publisher screen. It says to produce PDF, select File tab. So when you then select File, which is that one there, or use the output to Excel, which is the output to Excel there, you can override the location and publish. So the location that sits here, you can override that and you can publish it to the location that you prefer, effectively. However, next time you run those reports, the same location will be remembered if the utility has been installed, whereas currently it will just default to the default area, and every single time you print a report, you have to overwrite that. This affects every user that uses the publisher and remembers the location for each user per report they run. So once you set the path, it defaults to it next time. So all I can show you is that I ran a calculation report earlier on for monthly group, both to file as well as to Excel. And what I'm expecting to remember to happen is if I click on the file tab, it's going to remember that I set that location to prints. If I put that in, it's going to ask me if I want to override or append it because I used it before. And of course, if I now print it, it will print that report to that location and remember that for the next time I do it. In exactly the same way, should I have chosen the Excel output and selected the same thing, it overwrites it again for me because that report exists in that location already, as you can see. So it's just a way to control where you output your reports to per person who runs these. And this is available every single publisher that you see within your system. This is available to the user. So it remembers the location per report, per user, per company. I'm not going to run the report now or print it, just so you're aware. Pardon me. So one of the things I'm not showing off, I'm not demonstrating, is the monthly average reporting. This is a third-party product. Hopefully we'll have our own one soon, but it's a quick install with the UDS, and what it gives you is average pay options for any payroll group that you might have, including weekly, 2-weekly, weekly, and monthly groups. You have the ability to set periods used for calculation. What do I mean by that? If you use monthly, you can set the calculation for averages to 6 months rather than 12 months, for example, and the same with any of the other groups. You can exclude any payment profile from the calculation. Automatically, a new tab is created on the payment profile where you then just select to exclude it from the average reporting. Like expenses, for example, you might not want to include expenses in the average holiday calculation. You can exclude or include any statutory payments in that calculation, and of course any tax credits. Once installed, there is a tick box effectively against each payment profile. It's an additional tab, and on the tab you select to exclude or include that payment profile from the monthly average reporting or from the average reporting calculations. And it's got a set options area where you include or exclude statutory payments and tax credits. I'm not going to show you this. It's really just a miscellaneous report you run in Opera that gives you a list of employees and what the average holiday calculation is for them. Auto-enrollment utilities, well, there are just too many to show off, and they all kind of do the same thing. As you are aware, in Opera 3, all versions, the pensions calculation is a standard functionality. You can set all your pensions companies up, you can have your deduction profiles, and it will automatically calculate any pension for you. You can have salary sacrifice, additional voluntary contributions, etc., within the system. What it doesn't do is talk to the actual pensions companies, and that's where these utilities come in. So we have developed a couple of utilities ourselves, and we offer a range through a third party. We offer a full range of utilities for auto-enrollment. What happens is data is collected from various locations in Opera, saving you a lot of time and ensuring the correct information is sent. The data export utility produces CSV files in the correct format that can be easily uploaded to the pension provider via their web portal. Internally in the Pegasus product, there is Nest and Now available at a small fee, integrated within the software and linking to Nest and Now pensions. o-a-sys itself, we've done now, and people's profiles as pension utilities ourselves. A year following is a list of auto-enrollment utilities available from third-party providers, but I'm just putting it down here because I want to show you that it really covers a lot of different providers. So you can see Aegon, Aviva, different kinds in the list, Creative AE, Legal and General, Now Pensions, People's Pensions. You can see Royal London, Scottish Widows, Smart Pensions, Standard Life. And then I want to mention a bureau edition. So what is the case is if you're a really large employer and you've got thousands of people on your books and you use 10 different auto-enrollment companies, the bureau edition allows you to bring it all together in one area effectively. So with the ability to create pensions formats for all of the pension companies that I've mentioned. This is available for Opera 3 VFP, SQL, and SQL SE versions of the product. That takes care of auto-enrollment and pensions. The last thing I want to mention is Duet. Duet is a third-party product that we have linked with, and that does some very clever app-based information you can use on browsers, on mobile phones, on tablets, and that kind of thing. It's managed service tickets, timesheets, expenses claims, and requisitions. Requisitions, what I mean by that is the ability to put a requisition in that becomes a purchase order within our Opera 3 system, negating the need for a host of people to be on the Opera system to try and do requisitions on what they need to be ordered. It runs on all modern mobile devices, desktop browsers. No software deployment is required for this. You just use the Duet applications that you need. There is no requirement to use a specific accounting or ERP solution. It's an easy to use and learn user interface requiring minimal user training and support. And you can customize the system colors to reflect your own business. There's no connection, no problem. Store entries offline and then upload to the server when an internet connection becomes available. An internal notification system helps to keep users focused on key tasks. And quickly import key data, dimension, supplier address, and inventory records from CSV files. User roles allow varying permissions levels to be assigned, controlling the level of functionality and access allowed. It's a flexible reporting tool that enables data to be queried along custom filtering, sorting, and grouping. Download the resultant report data in Excel or CSV format for further analysis or transfer to your accounts or ERP systems. Customized reports can be saved for later use and published for other users to run. Now, at this point, I'm going to pop over and show you a short 1 minute video as an introduction to the Duet suite of products for Pegasus.